Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark will talk about the performance of Amazon and how it could signal a change on the major equity markets. Inc. Research CEO Ted Dixon comments on the business and investment climate under a likely BC NDP Green government. He believes they've shown very little to encourage investment and business in BC. We could see an economic collapse similar to the one in the 70s when BC was ruled by the NDP. Hilliard MacBeth from the MacBeth Group comments on all the consumer debt piled up by Canadians. He says little has been done to track or deal with the problem. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to the show, Ross.
Always good to be with you, Jim. Amazon.
Is there anybody else really boosting the market over the past week?
Well, actually, Amazon, the FANGs have had a pretty good run, and Amazon's finally over $1,000. I guess that was just a matter of time. It's actually turning into one of those bubble items in here right now. It's had methodical action up until the last few weeks, but just really has gained upside momentum here at the end of May and into this month. And actually, we're going to have a write-up on it next week because the type of pattern we're seeing right now has been a significant one in the past. Not that it's an end of the move for Amazon, but definitely there's some worthwhile, I think, points that we can look at from a technical perspective. So, you've got this leadership, which is very, very narrow. And if we take a look at the equal weighted index on the S&P, it's having trouble making new highs. If you look at the number of stocks that are still under their 50 or 200 day moving averages, the numbers are not good. I think in Toronto, there's 45% of stocks on the TSX composite are below their 200 day average right now. So you can see that if you're not in the right sectors, then it's a pretty tough stretch right now. And from a seasonal perspective, this is the time when, in the spring through the summer, you want to be into the more defensive names. So those would be onto your staples. The XLP would be an index to look at there. Also, the bond market. And bonds have, they bottomed out at the beginning of the year. And for all that we're hearing that interest rates have been creeping lower and higher in the States, and the Fed is likely to raise rates this month, that's on the short end of the curve. As we get out into the 10, 20, and 30-year market in bonds, they've been very buoyant and closed off the week at their best level of the year. So with that, the utilities are doing very, very well, and that's another one of those seasonal plays. So, I think for the ones who are faint of heart, you want to stay away from those FANGs and be thinking more towards the more conservative side.
The U.S. had poor employment numbers just announced with stagnant wage growth. Why would the Fed want to boost rates if that's the case?
Well, this is just 1 month's worth of numbers, and things have been looking better as far as the economic numbers are concerned in general. And they probably get this one rate increase behind them, and that seems like that could be it for the year at this point, unless things really start to pick up in the second half of the year. But, employment's one of the things they look at. They're looking at the strength of the economy. They're looking at the equity markets, and things are reasonably buoyant. So it's a time that you should be starting to raise rates, because when things do turn down, they're going to need the ability to drop rates to try and stimulate once again. So now's that time to do something with the rates on the upside.
Going into the NAFTA negotiations, Canada did have a surplus for goods traded to the U.S. However, U.S. services to Canada balance that out. Do you think they're going to take that into consideration when they start talking about the free trade agreement?
Oh, yeah, this is going to go on for ages here. I think that, from our perspective, I think we've got a pretty good team that's going to go in there and negotiate very well for us. And I think the end result will be not nearly as bad as people had originally thought it would be.
And how ironic the item that traded the most from Canada to the U.S. was softwood.
Yeah. And now we're going to give our lumber producers a little bit of a bonus on the side here to help to keep their businesses viable. So, this whole thing on currencies, with the U.S. dollar closed against the basket at its worst level for the year this year. This is a retest of a low that it had about 10 days ago. And from our perspective, we need to see this low hold, because the major support line coming up for the last 3 years from 2014, we're underneath that. We have been for about 3 weeks or so, and some of the technicals are getting oversold. So this is where you need to turn, because if you start to go oversold and you can't get the bounces, that's when things can feed on themselves. So we're going to watch the dollar very, very closely for next week. That also means you've got to keep an eye on the gold market, which has been doing well. We closed up through 1280 at the end of the week. The miners are having trouble. The GDX, GDXJ, and we've got this rebalancing to happen on the gold mining indexes this month. So we're going to watch the metals pretty darn closely as we move through June.
Ross, thank you so much.
Always nice to be with you, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Ted Dixon, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com. Welcome back to This Week in Money, Ted.
Well, it's great to be back, Jim.
The big question facing British Columbia, what will the business climate be under an NDP/Green government? Should everything work out the way it should? Somebody could cross the floor, and next thing you know, the Liberals would have a majority.
Right. This framing of this agreement as being a 4-year agreement is, let's just say, optimistic at best, and more realistically, it's wishful thinking. That they'll get 4 years is not impossible, but unlikely. The real problem, though, with it is the hit that I think the business, not only the business community was going to take, but just overall sentiment with respect to the policy manifesto that the Greens and the BC NDP have signed. There's not a lot in there that will give, there's very little in there that will give the business community and investors much comfort. There are some aspects of it that could be positive, but in general, I'd like to sort of see a little bit more balance in their approach towards economic development, resource development, and taxation. But in their manifesto, it's basically all about how we're going to reduce investment in the resource area and slow it down, and look for ways to grow government. So that's the general thrust of the agreement between the two parties at the 50,000-foot level.
So what would happen to housing under the proposed NDP green policies?
Well, arguably that is one of the brighter spots if they pull through on some of the NDP campaign commitments to eliminate the home mortgage program, where the BC government was giving free mortgages. That was really a bad idea to begin with, and if the NDP do say as they say they were going to do and eliminate it, that would be positive, because it's stoked real estate speculation in the condo market. So I think you could see a cooling of the condo market quite quickly. I think a lot of speculators were front running these buyers who were getting the low, the zero rate mortgages. It was an unhealthy situation, and when we wrote about the election on CanadianInsider.com, we endorsed the BC Liberals, but we did point out that this was a big policy mistake they'd made. So if that gets reversed, that would be a positive aspect. It will help cool the condo market a bit. But the single family homes area is much more complicated, and it's as much a problem with Ottawa and the Bank of Canada with its ultra low interest rates as it is other issues. So the single family home situation, I don't expect to see a big impact based off of the change in government if that's what happens.
What about the NDP's proposed $400 a year renters grant, just like homeowners get a grant?
Well, that wasn't in the accord. We'll have to see. I don't think that will have much of an impact. I mean, the renters will like it, for sure, but it's not going to move the needle in terms of affordability. That's for sure.
In the field of technology, how would an NDP green government work out?
Well, I think, look, the tech sector is mixed. If they can cool down the condo market, it will bring some affordability to that sector to help maintain and attract workers. So that's positive. How the rest plays out, if they offset that with higher taxes, it's mixed outlook, I would say, at this point. They're going to put a lot of emphasis on clean energy, which is fine. However, we now have to wait for what the Americans are doing with the clean energy, with the Paris climate deal, and that is going to throw a lot of uncertainty to that sector. That's beyond the Victoria's control, no matter who is in power. It just, I think, throws that whole sector into a bit of a cloud, and that's nothing, of course, that Andrew Weaver or John Horgan can deal with up front.
Well, I've already heard of businesses setting up in Washington State instead of British Columbia because of the carbon tax, one that's already there. Well,
the carbon tax, the way it is implemented now, is revenue neutral. So the idea was that you would make up jobs in other areas, and under the BC Liberals, that appears to have happened because we've had some of the strongest job growth in Canada. Well, one can debate where those jobs came from, but basically the bottom line is BC job creation has been pretty strong. Now, the big troubling aspect, Jim, of this accord between the Greens and the BC NDP is under the section of jobs. There's no fewer than 5 job-killing aspects of the agreement. They've got 5 initiatives that will do anything but create jobs. Will in fact eliminate jobs. They're going to increase the carbon tax without a commitment to keep it revenue neutral. So basically, increase taxes. And then, some of that will go to rebates, but a number of that new revenue will go into some kind of government spending, it seems. So that's going to be a job killer on net. They're promising to kill the Kinder Morgan pipeline expansion. Okay, so that will eliminate not only construction jobs with Kinder Morgan, but it will put a chill in terms of overall private infrastructure development in the province. So basically, it's going to be the government. It's going to be the only game in town for under this coalition government. And then we're going to get more labor rules. Well, that's usually not good for creating jobs. One can argue the benefits of having more labor force safety rules in, fair enough, but it's not a job creator. They're gonna move the minimum wage higher. Well, minimum wage is, it's good for those who get it, but it doesn't create jobs. But, I think that's pretty well understood. And finally, we're going to get an innovation commission that's going to, certainly create jobs amongst those who are employed in the commission. But I can tell you, you don't create high-tech jobs through government commissions. And they're going to promise more forestry and mining regulations. Well, that's not a great job creator either. So we're kind of moving back to the way we were in the 1970s under the NDP at this point. And John Horgan and his group have not done anything to dispel this notion. We haven't heard any advocacy from the NDP for the resource sector, so it's very troubling. It's very troubling. The TSX Venture Exchange has been wobbly since the mention of the pact middle of the week, and I think reflects a lot of uncertainty with companies that have junior mining operations in BC. So it's a very bad start in terms of the resource sector for this new proposed coalition government.
Do you think just the fact that it's NDP and Green sends a message that BC is no longer open for business?
Well, that's really up to the BC NDP and the Greens to convince investors it is a good place to do business. And I can tell you there was nothing in that document that suggests that. There are a number of areas that would potentially lead to a better transit system, but at what cost? And how is it going to be paid for? I mean, so there's two sides to the ledger, and that was not worked out. There was no funding commitments aside from increasing the carbon tax on any of these promises. So there's a lot of uncertainty. So what we've got with this shaky coalition is not only uncertainty in the coalition because there's only one seat, but their policies are very grandiose in objectives and there's no accountability at this point as to how they're going to be paid for. So it's not a positive development at all for the business community and or for investors. I mean, not just about the business community. I mean, it's about putting private dollars into the ground and into services and into infrastructure that builds a better life and wealth for British Columbians, and I don't see that in the document. If anything, we seem to be going back to the 1970s, and we haven't seen anything like this actually since the 1-2 punch of Dave Barrett and René Lévesque, where we had a very strong socialist government come in under Dave Barrett, and then in Quebec we had an antagonistic government against Ottawa when the Parti Québécois are elected. Well, the difference here is, of course, we have both John Horgan and Andrew Weaver together in one coalition, and we've got Andrew Weaver, who's basically walking away from the rest of Canada on climate change, and he's essentially, telling Alberta and Ottawa to stuff it with their climate change policy and their social policy. So this is a very belligerent attitude that the Green Party has, and it's not one that's basically conducive to good federal-provincial relations. In fact, he's basically saying we don't want to be a part of the Canadian family. We want to do it our own way. Now, he hasn't gone the next step in saying what happens if we don't get our own way. But it's not a very good start to federal-provincial relations. We could actually end up in a crisis between BC and the rest of Canada on this pipeline, depending on how sincere the BC NDP are in trying to block it.
Now, of course, the Kinder Morgan pipeline has already received provincial and federal approval. What can they do to stop it?
Well, we will see. I mean, there's all sorts of tricks they can try and pull out on, I believe, on permitting and the like. We will have to see. Is this? A lot of this depends on how the NDP execute this agreement. I mean, they are in the driver's seat in this agreement, although the BC Greens have all the leverage. So the BC NDP are now going to have to come out and provide some calming of concerns amongst investors and amongst other people in Canada that we're not, prepared to go to war with them, politically on this one pipeline, because it could unravel pretty quickly into a trade dispute with Alberta and very hostile relations with Ottawa. Now, there are others who are thinking, well, no, it's all going to play out and everyone's going to get along the Canadian way. But that's not in the blueprint, and that's not the kind of rhetoric we've heard from Andrew Weaver at this point. He's talking about constitutional wars and is being very belligerent on the issue. And this is not a healthy development for BC. And I don't see any way how this is a healthy development, having this kind of attitude before the coalition's even sworn in. It's very concerning for those of us who believe that, at some point, a provincial government has to work in the national interest. And when you have both the major federal parties in Canada supporting the Kinder Morgan pipeline, you even have the NDP in Ottawa not taking a position, as far as I'm aware, because they're going through leadership convention process, leadership race process. There are huge ramifications to what Horgan and Weaver are trying to do with Kinder Morgan, and it goes beyond just the barrels of day that will be flowing through that pipeline. It could set up for a crisis if it's not managed properly.
We'll have more with Ted Dixon next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Ted Dixon, CEO and co-founder of inkresearch.ca, his website, canadianinsider.com. Well, we were talking about perhaps some kind of a constitutional crisis. Andrew Weaver saying, well, the Aboriginal people could take it to court and make all kinds of land claims as well. Although I didn't see the Trudeau government rescind legislation made by the Harper government that gives the federal cabinet vast overruling powers when it comes to natural resources.
Well, and they've also have the Constitution on their side, where it's pretty clear that pipelines and the coasts are a federal jurisdiction. Now, there were no complaints when the Trudeau government put in a tanker ban in northern waters, but we'll have to see how this plays out. We really will. There's hope that once this deal gets done, and now it's been done with the Greens and the NDP, and the NDP actually get into government, because a lot can still go wrong between now and the vote that has to take place in the legislature to put them in. We'll see if the NDP moderate a little bit, but throughout their campaign and as of today, they've showed no inkling to moderate. This is definitely the NDP of the 1970s, and it's going to be a very rough ride, I think, for investment in British Columbia unless we get a little bit of moderation and some sort of tangible evidence that industry is not going to be, overburdened with regulations, new taxes, and that in fact BC is open for business. And but at this point, the reality is, I'm sounding a little downbeat here. We did endorse the BC Liberals, as I said. So we're obviously biased. But the BC Liberals made some mistakes, and those mistakes can be corrected, but they can be corrected without having to drive investment out of the province. But the BC NDP and the Greens have got a very ambitious socialist agenda that they're going to try and ram through with one seat. It's going to be a very, very high period of uncertainty in the province, and they for all the talk of all British Columbians working together and parties working together, that document that the BC Greens and BC NDP signed had no signs of any outreach to the BC Liberals. This is a us versus them legislature that's being formed, and it's on a knife edge. There's one seat, so. We'll see how long this government lasts. If it does get into government, this proposed government, it's not government yet. We'll see how long it lasts, and we'll see if it can get through some of its ambitious plans. But if they try and undertake what they've said they've done in this document, we're going to see for mining companies, they'll continue to operate their head offices, hopefully, in British Columbia. They'll just be doing all their exploration in places like Nevada, and Alaska, and Yukon, right? These are the places where these companies will spend their money, and so it's we'll just watch and see. That's how it's going to evolve unless we get a major change of tune here. And I don't see how the NDP can change their tune because they're so indebted to these three very now seems to be quite radical environmentalists in the Green Party who are not willing to sign. They're not willing to advance the Canadian national climate strategy. They want us to go our own way, and I just don't see how that has a very good ending.
Of course, too, you have an NDP government in Alberta already saying we're pushing the pipeline through BC whether they like it or not. Do you find it weird that two NDP governments could be at odds with each other so quickly out of the starting blocks?
It's very strange. Andrew Weaver is probably now the best friend, actually, that Rachel Notley has, because when she wakes up in the morning, she gets to fight him as opposed to Jason Kenney and the Wild Rose in Alberta. So from a sort of crass political perspective, it's helpful to Rachel Notley to be seen as sticking up for Alberta's interests, but she's also sticking up for Canada's interests, and that's the problem here. Is that you've got a socialist and Alberta who's aligned with not only the federal Liberals but actually also the federal Conservative Party against the BC NDP and the BC Greens. So this is a very dicey situation. And the Angus Reid Institute poll that came out in early May on Kinder Morgan found that a majority of British Columbians supported the project, and the opposition was clustered primarily in the Lower Mainland, and that was the only real area that I recall in the poll where there was clear opposition. I mean the Lower Mainland. I mean Vancouver. Once you get out into the suburbs, Kinder Morgan was still a positive. So if the NDP are going to play a risky game if they do sincerely try and stop it. At the end of the day, one could think that maybe they're just going to go through the motions to keep the Green Party happy. If that's the case, well, it's still a cynical game to play. It's not going to make investors feel any better about the province, but at least it would avoid the kind of constitutional crisis that we could be facing if they go to the wall to fight it, like the agreement says they're supposed to.
Well, as we've already mentioned, the federal cabinet has awesome powers. And they could just pass new laws saying it doesn't matter what BC argues, the pipeline's going through. Because it's so important to the national economy.
It is, and, but then they have to enforce it. And this is where the crisis part comes in. Well, if we have some First Nations try and block it, or, just protesters in general try and block it, what is the federal government going to do? And what is the BC government going to do? This could get could get. It's not hard to envision a scenario where this isn't very pretty. Now, let's hope it doesn't go there. But right now the base case is that we're heading for a conflict with Ottawa, and you're right. It is a huge impact on the Canadian economy. And for those who have been following climate change politics in Canada, the fact of the matter is that we have a national climate strategy to try and meet our objectives under the Paris Accord that was signed, I believe it was in 2015. You may have that year wrong, but it was signed under Obama. And the key to that is getting Alberta on board, because aside from driving around in your cars in Ontario and Vancouver, which, emits greenhouse gas emissions, Alberta and its economy is a big contributor. So what you have to do is get Alberta on board. Well, Alberta, to get its industry to take the cost of reducing greenhouse gas, because there is a cost, the trade-off is, okay, you get to send your oil to market, because if Alberta stops its oil production, Saudi Arabia is going to keep its oil production going. So, this pipeline in itself is not going to increase greenhouse gases from the oil sands, okay? Yes, there's some greenhouse gases that are emitted when you build the pipeline, but if Alberta does not use the pipeline to get its product to market, it will either use rail, which is extremely dangerous, or it will be that product will be stored, and it will be instead have to compete with product from Venezuela, which is also oil sands. So having this pipeline is not in itself going to change the overall ability of Canada to meet its climate change commitments, except that if it's not built, then Alberta will say, well, what's in it for us? Okay, you want us to take all the costs, but no one else in Canada, right, is willing to help us out and get there. And so, Alberta could say, well, we're going to take our marbles and, and place somewhere else, and it's not going to be under your climate strategy. Then the whole thing falls apart. What's BC going to do? Make up for all the, if Alberta says we're not, we're pulling out of the agreement and we're not going to meet it, what is BC going to do? Triple its commitment to reducing greenhouse gas emissions? Okay, what's the cost of that? Let's hear about that. John Horgan and Andrew Weaver, we're all waiting, to tally that cost up. So that's why it's so important that this pipeline go through if you're serious about Canada trying to meet its Paris climate protocol promises. And for Andrew Weaver to lecture everyone else in Canada about how we should be doing it is a little much for a rump group of 3 MLAs that have just arrived on the scene. Perhaps their ambitions should be a little bit more modest, and and join the Canadian family instead of trying to pull us out of it on their first day on the job.
Well, what about the Canadian dollar and the impact on that if we can't sell our oil?
Well, the Canadian dollar has got two issues right now. The price of oil and us being able to deliver it. The oil does help the Canadian dollar, but a bigger concern, I think, is the Bank of Canada. And so there's two issues there. But certainly, if our oil industry takes a hit in the short term, it won't be positive for the Canadian dollar. But I think there's a recognition even in Alberta that we have to transition away from such alliance on fossil fuels. I don't think there's any disagreement on that. The disagreement is, do you do it tomorrow, or do you phase it in over a longer period of time? And I don't know any political movement in this country that has been successful at trying to rush through anything, and so I think the Green Party is going to find this out, and they're going to be lucky if they even have one seat after the next election, just because of the choices they've already made and the type of uncertainty they're going to put the province through and the country through. I mean, this is very bad news for Elizabeth May, if she's thinking of being able to build on the success of the Green Party here in British Columbia, because people are going to see that it's a party of confrontation, and not a party that's willing to play in the Canadian family. And that's their decision. But we're going to have to go through some short-term pain, unfortunately, while this gets worked out. And in the long run, it may be good for everyone that the Greens have showed up and they've shown their true colors. They've shown how radical they really are. And then given that we're in a minority government, we'll probably have another election within a couple of years, and if the BC Liberals have regrouped, and assuming this coalition government does take its seat in the legislature, if the BC Liberals can regroup on the policy side, they'll have a good chance, a competitive chance in the next election. So, but in the meantime, it's what happens in the meantime before voters get to give their assessment of this Green NDP coalition that's about to, take power.
Christy Clark refused to tell the media what she thought went wrong for her. Very quickly, what went wrong?
Well, in general, look, in 1972, Pierre Trudeau ran on "The land is strong." Didn't work out so well. Stephen Harper ran on, being good fiscal managers. That didn't work out so well. And, the BC Liberal, the cornerstone of their campaign was we're good fiscal managers. But, Jim, good times often leads to bad policy decisions. And, we've had some pretty good times in British Columbia. And that's like we're experimenting now with some different policy paths, and unfortunately they're turning out to be bad policies. And that saying, by the way, should be attributed to, I believe, an Indonesian finance minister who made that observation that when times are good, voters often experiment with riskier political avenues.
Ted, thank you so much for talking to us.
Thanks very much, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. Coming up, Hilliard MacBeth, next on This Week in Money.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be back on.
You just saw a report about Canadian consumer debt, personal debt, and you find it quite scary.
Yes, there's an economist. His name is Professor Steve Keen. He's originally Australian, but he's based in England now, near London. He's got a new book out. It's called Can We Avoid Another Financial Crisis, I believe. That's the title. And it's talking about how economists have completely missed the important things in life. And the important things in life are the amount of debt and housing prices and that sort of thing. So the economist models don't deal well at all with house price growth, asset price growth, stock market growth, and private sector debt. They do talk a little bit about government debt, but they have very little room in their models for private sector debt. And of course, we all know private sector debt is what makes the cycle so drastic. So you get booms and busts because private sector debt exists, even though economists ignore it. And so he's identified in this book the countries that had the problem in 2008, 2009, the U.S. being a prime example, but there were others like Ireland, Spain, and that. And then with the new book now, he's talking about the countries that are the next ones to have the problem. And China, South Korea, Australia, and Canada, and there's 3 others that are mentioned, are prime candidates for the next one. And the reason that he's identified them, and the reason that he's worried about that, or he's convinced actually that there will be a problem, is because of the level of debt, which in Canada is more than double the level of GDP, and also the rapid growth in debt. So what happened in Canada in 2008, 2009, we had a small slowdown in the rate of growth in private sector debt, and then shortly after that we had a huge surge. So it went from 160% of GDP in 2008 to 220% of GDP in today. So in 9 years, huge increase. One of the fastest. The fastest is probably China. Australia is right up there as well, and Canada. And so we're well above the minimum threshold level of potential trouble in terms of the total, which is we're well above the 150% cutoff to be in trouble on that basis. And then we're also in trouble based on the rapid growth. And the economists don't, the Bank of Canada, the Bank of England, the Federal Reserve Bank of the United States of America, and the RBA in Australia, they don't track this as part of their models in terms of deciding whether they should raise interest rates or lower interest rates. So it's a very odd situation, and he makes a very convincing case that the problem with private sector debt is going to lead to a financial crisis in these countries. It's pretty easy to, without going into the economics of it, just in layperson's terms, think about the fact that growth in the private sector means we've been spending more than our incomes for quite a while. Incomes are growing, say, at 3 or 4%, and debt's growing at 6 or 7%. So the total gets bigger and bigger. And at some point, people might decide to start paying back their debt more rapidly, or will be forced to pay back their debt because of changes in the rules as to how the debt is offered to people. And when that happens, it's very hard on the economy, because everybody knows that we live in a consumer spending economy now. So when people go from spending, say, 5% more than what they make and gradually going deeper and deeper into debt to, say, spending 5% less than they make, well, that's obviously a 10% hit to the economy, and it would be devastating. So the authorities have to think about a way of getting out of this predicament that we're in Canada and a few of these other countries. And Professor Keene in the book does talk about some remedies, but he says, and I would agree, that it's very unlikely that any government would adopt the remedies that would actually work.
What are some of the suggested remedies?
Well, he said, first of all, he talks about what governments have been doing which doesn't work, and that is they decide that they have to balance their budget. So the government would kind of say, well, we have to balance their budget. So then the government's cutting back on its spending at the same time that the private sector is deciding to save instead of go deeper into debt. And that just makes it a double whammy, and that leads to things like the 1930s depression, that sort of thing. So what he's talking about is, and if you go back thousands of years, this has happened many times. And in early writings in the Bible and different religious areas and histories of regimes back when it was a feudal system and that, what would happen would be there would be something called the Jubilee. And the Jubilee was you just canceled all the debts and put everybody back to the beginning and start over again, kind of like resetting your iPhone. And it's drastic, but it was quite common. Often when the king would die, for instance, that would be a time when they would push the reset button. So the author recognizes that would be difficult in today's society. You just cancel all the debts and have everybody start over again. So he's got a proposal, which is you give everybody an equal amount of money. So the government prints a bunch of money. They deposit into everybody's bank account, every household's bank account, the same amount of money. And the people that are deeply in debt, you require that they pay down their debt. and the rest of the people can do whatever they want. So that gets around one of the issues with helping people that are deeply in debt out of their predicament, which is the argument what they call moral hazard. And it's kind of unfair if somebody lives within their means and doesn't borrow a bunch of money to watch the government bail out the guy who bought the boat and the car and the big house that he can't afford and went on all the vacations and stuff. It's very difficult politically to sell that. So his proposal is to give everybody the same amount of money, but force the people that are deeply in debt to use it to pay down their debt. And but he also recognizes it's very unlikely to be implemented. So,
well, I recall Germany did do something similar to that after the big crash in 2008. Was they gave everybody, I think, 10 or 15 grand to go towards a brand new car, and so a year later, no more recession.
Yeah, in the middle of a crisis like that, it's a very good point. In the middle of a crisis, you can get away with a lot of stuff you can't get away with in just normal times. So, and so when the crisis in Canada, in China, and South Korea, and Australia actually hits, then you might be able to sell something like that. I think that there was one in Canada too, where there was some kind of help of getting rid of your old car and getting a new car. And that also, there was also a bailout of GM and Chrysler at the same time. So it's it seems like it's easier. Somehow people don't recognize when the government's bailing out big companies. I mean, they may complain about it and all that stuff, but they kind of get over it within a few days, and a whole bunch of people don't even notice it really. But if you actually give your heavily indebted neighbor that has a huge house and 3 cars in the garage a bunch of money, and they don't give it to you, good luck with that. That's not going to work.
Well, wouldn't the idea be then give everybody 20 grand, but if you owe debts, that 20 grand has to go to the debt first?
Exactly. It has to pay. I think that's what he meant. Now, he didn't actually, really carefully lay it out, and I just read the book once. I have to actually go back and read it again, but that's the gist of what he was talking about. So I think it would work. I think he's got a couple of books out. He does a lot of presentations, most of which I've read. So I would have quite a bit of confidence that actually what he would suggest would be workable. I think the main argument against it is that it's just not going to be politically possible to do something like that. So I remember in Alberta, for example, it's a similar thing. They call the term for it is you get penalized for coping. So Edmonton, under the mayor Edmonton had, his name was Decor, saved every penny, was very careful, didn't approve any big spending plans, and subsequently didn't get a rapid transit system and a bunch of other stuff that Edmonton didn't get. And Calgary, under the mayor at the time, his name was Ralph Klein, who eventually became premier, went deeply, deeply, deeply into debt. And so what happened was, of course, the provincial government recognized that Calgary could never pay back all their debts. So they went in and forgave the debt for Edmonton and Calgary. The difference was Edmonton didn't have any debt, so Edmonton lost out. It was very unfortunate. So the lesson from that is spend as much money as you can, go deeply into debt, and then somebody will bail you out. But it's not a good message to send, because then people act very irresponsibly and don't worry about the consequences. So I honestly don't know how we get out of this situation that we're in, but and there will be some, there obviously will be some. If there is a crisis, there obviously will be some questions as to how did we allow this to happen. But as you and I've talked before, all of the participants, whether it be the banks or the credit unions or the alternative lenders like Home Capital, they've all operated under the rules. I mean, there's probably been some people that bent the rules a little bit, and the CBC's got an investigation about the banks pushing products onto people that they don't really want. But generally, the rules have been in place, and everybody thought the rules were good enough. But there's nobody overall responsible for saying, "Hey, wait a minute, what about this? What about this level of debt that we're accumulating? That could be a real problem down the road." There's no regulator, whether it be OSFI or the Ontario Securities Commission or the Bank of Canada or all these different people. that's got the overall responsibility for saying, wait a minute, this could be a really big mistake. And so here we are. It's a very unfortunate situation. I don't know what happens. We've obviously talked in the past about Vancouver and real estate and what's happening there. But the new thing now is Toronto real estate, as the rules, it sort of was predictable, but the rules in Toronto, or the real estate in Toronto, is changing very rapidly, almost day by day. And several of the realtors on the ground I've seen quoted in reports saying that it's over. The real estate market has turned the corner in Toronto, and now it's going down. It's not going up anymore, which is amazing after a 30% year-over-year gain as recently as March. So, but the listings in 1 month alone jumped by 25,000. So it's a pretty amazing turn there.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, just before we went on air, we were talking about mortgage defaults. Apparently, people are not following that Canadian myth anymore of, I'll pay my mortgage even though the house isn't worth as much as I'm paying for it right now.
Yes, the reports out of the U.S. indicate that, and actually Canadians believe this too, that there's this mistaken belief that somehow Canadians, because they can't walk away from their mortgages except in Alberta, and in certain special cases, most Canadians cannot walk away from their mortgages in the event of job loss or something like that, or a divorce or something, that somehow they're going to be able to pay their mortgages even if they're losing money on the house. So the example has happened in the U.S. where a house was bought for $300,000, the mortgage was $400,000, or at least it was bought for $400,000, the mortgage was $400,000, then the house drops to $300,000. And there's all kinds of people today, and even today, 8 years later in the U.S., that are still paying the mortgage, or on the hook for the shortfall. Now, the difference in Canada is legally you're not allowed to walk away from that shortfall. So say you stop making the payments, the mortgage defaults, they sell the house, and they only get $300,000 for the house. The mortgage was worth $400,000. There's a $100,000 shortfall, as it's called. So this shortfall belongs to the homeowner, and the myth is that somehow they'll pursue the homeowner in Canada, and that the lending institution, whether it be the bank or the credit union or whoever, will not have to pay that $100,000. But that's all it is a myth, because obviously personal bankruptcy is available to everybody in Canada, and they will pursue that. And we saw a huge increase, not Canada-wide. It was only about 2% Canada-wide, but 23% gain year over year in bankruptcies in Alberta and Newfoundland and Saskatchewan, roughly similar numbers. So the resource-oriented provinces like Alberta, people are realizing that they can't make their payments, and they're not going to hang around and pay that huge mortgage off when they can't afford it and the house is worth a lot less. They're just going to walk away. And now there was a law in Alberta in the 1930s instituted that because there were so many people lost their homes in the 1930s, and the banks chased them for the deficit. There was a law instituted by the government of the day that you couldn't do that on a person's residence where he occupied the residence. And but of course nowadays the laws have been changed. The original law is still on the books, but for instance, CMHC, that law doesn't apply. There's a bunch of different little things that I suspect we'll find out that very few people have that exemption where they can just walk away from the home. Unlike in the U.S., where I'm not sure exactly, but it depended state by state, but there were a large number of states where people could just walk away from their mortgages and didn't have to worry about the shortfall. But in Canada, most people cannot ignore that, but they have the additional option of declaring personal bankruptcy, and I'm sure they will. I don't see a whole bunch of people. So when people say, "Wow, the lenders in Canada are safe to invest in because they've got the CMHC insurance covering it, and if that doesn't work, then they've got this." People can't walk away from their mortgages the way they did in the U.S. I think it's a myth. It's not the reality. The reality is, if people lose their jobs, they can't afford the payments, they'll stop making the payments. And if it means declaring personal bankruptcy, that's what they'll do. There's another thing happening with credit cards and auto loans as well, and people can apply for a different relief under that. It's called a consumer proposal. But if there's a house involved and the mortgage involved, then it has to be a personal bankruptcy. Which, by the way, means for 6 years you can't. There's very strict rules about what you can and cannot do in terms of borrowing money. And I did discover, though, that it is possible to still get a Visa card if you are in those 6 years of bankruptcy.
In other words, you got into financial trouble, and the banks are still willing to let you get into more financial trouble.
What happens is with that Visa is because so many people now in society today expect you to have a credit card, it's not fair to people that are bankrupt to have to go around and say, well, you know what, I'm sorry, I don't have any cards. I can't get a card because I went bankrupt. Nobody wants to say that. So what they do is they allow that person to get a Visa. It's got a special name. And what they have to do is they have to deposit the money up front. So they say they deposit $5,000 in the Visa account, and then they can spend that money, and that way they can appear to have a credit card like everybody else does. And if they run over it, then they have to pay the interest on the debt as well. So it's an interesting way to get around that, and it would probably teach people good discipline, because one of the ways they get into trouble, the people that do get into trouble, is with credit cards. And then obviously if the house has gone up, say they're living in Vancouver for a number of years, they would have a big gain on their house. So the problem starts with the credit cards, then they refinance the house to get a line of credit on the house, and then the next thing you know, they've got the house fully loaned up as well as the credit cards, and then they're in trouble. And talking to the people that work as bankruptcy trustees, there's a new phenomenon I'm told, which is that there's all kinds of regular people who have really not gotten into trouble yet in terms of their jobs and stuff, but they're just so indebted that they can't make their payments, and they're starting to. The bankruptcy trustee people, they don't go and advertise I guess they do advertise, but they don't go out and sort of find the customers. They just wait for the customers to come to them, and it's all walk-in traffic. But one of them that's based in Toronto indicated there's been, just in the last 30 days, there's been a huge increase in traffic, and that may be related to the change in the rules regarding CMHC and mortgage financing, because there were some really big changes made towards the end of last year that you and I talked about, and now we're, what's this now, 5 months later, we're starting to see the impact of that.
Alberta has seen its credit rating downgraded. China had their credit rating downgraded a week or so ago. What's with these governments seeing their credit downgraded?
Well, of course, the credit rating agencies got a really bad name in the global financial crisis, because they were rating all of those subprime mortgages, you probably remember, as AAA rated bonds, and they would bundle them into a security, and then they would do some magical stuff with it, and then they were able to get a rating. And then anybody that's seen the movie The Big Short will recognize that the ratings agency had a lot of pressure on them to rate these things AAA. So they're still smarting a little bit from that loss of credibility. And I'm not saying they're getting ahead of the curve, but they are now getting a little bit more aggressive in terms of downgrading some of these situations. But I still really question. This is the second downgrade that Alberta has done and has received from mostly the U.S. credit rating agencies. There is one Canadian one as well. And really, if you look at the ability, certainly Alberta's running a big deficit, but Alberta doesn't have very high tax rates, and Alberta doesn't have a provincial sales tax, and Alberta still has, even with the difficulties in the oil industry, still has lots and lots of room to raise more revenue if they wanted to. They don't want to, obviously, but if they wanted to, they could. slap additional taxes on different industries, and they could put in a provincial sales tax. So it seems really odd to me that they're now 2 notches below the AAA rating, while Canada is still at AAA rating, because certainly the Alberta government is in better shape than any other government in Canada by far, and so it really doesn't make any sense. But that's what they do, and maybe what they're doing is they're picking on Alberta to try and regain their credibility. I don't know. But there was another thing that happened this week, and that was related to that, was the IMF told a Senate investigative committee, just found out about this yesterday actually, that Canadians maybe need to put a limit on the amount of debt that individual households and individuals can accumulate. So that would be some kind of a ratio based on your income and your debt. And of course that has all kinds of problems associated with it. People would say, well, it's Big Brother interfering with my, if I feel I can take on the risk of borrowing that money and it's within the rules, then I should be allowed to do it. But and the other problem with that, of course, is that it's only a snapshot of time, and people's incomes can change dramatically. A household could have $200,000 in income, qualify for $1 million in a loan, according to the major banks these days. And yet one of them could easily lose their income, either through a layoff or pregnancy or whatever, and could be a month later, but they still have that $1 million loan. So none of these things are very workable, and of course the ratings flaw is still there. I think they're still in business, and obviously the people that issue debt, which is the Alberta government, didn't used to issue debt at all, but now it's issuing debt quite frequently. They have them as customers, so they don't want to offend their customers, but they have slapped Alberta with 2 downgrades. I don't think there's any doubt that at some point the government of Canada will lose the AAA credit rating. Most of the countries in the world, like the U.S. and France, that had a AAA credit rating have lost that status, and would suspect that Canada will at some point lose it. The last time Canada lost a AAA credit rating was in the 1990s, and then they got it back. Canada got it back under Finance Minister Paul Martin when they drastically reduced the deficit and the debt. Well, the deficit anyway, not so much the debt, but the deficit.
With all these concerns about credit ratings, should people, if they think they're getting in over their head, be a lot more, positive towards going, say, to a bankruptcy trustee to see if maybe they should be putting together a consumer proposal or looking at something to look at their debt before it becomes a crisis?
Yeah, I think they wait. I mean, there's so much shame attached to it, right? And there's been several books written about it, which I looked at when I was writing my book, and I was surprised, really quite surprised, because everybody thinks of these people that go bankrupt as being kind of like very disorganized, lazy people. But it turns out that that's not the case. It's a lot of times it's people that followed all the rules. They went to the bank said, you're approved for this loan. They took the loan. The bank, who would argue with the bank? If the bank says, you're approved, you're approved. And they assume the bank must know what it's doing, that it wouldn't give you the loan if you couldn't handle it. And then something happens, like divorce, layoff. I think about so many people I know that get into a career that they just hate, and they decide they want to go back to school and retrain, and or layoffs, or people get sick. People get bad diseases like MS and stuff like that, where they just can't work anymore, and the disability payments run out, and then they can't make their payments, and then they end up in bankruptcy. So apparently, according to what I read anyway, most of the people actually would be better off to seek bankruptcy earlier, and because the rules are quite clear cut, and people have a right to be relieved of their debts under the law. Now it's pretty harsh. It's not pleasant, and they don't allow you to keep a whole lot, but it's basically a fresh start is what it is. So most people, because of the stigma and the shame attached to it, wait until they're even deeper into debt and even deeper into trouble. And then the bankruptcy is that much more painful. Now I did talk to one of the bankruptcy trustees in Ontario, and he told me that sometimes people just give up. So if you think about it, somebody's going along, their debts are so overwhelming, but the credit card companies don't know that, right? So they decide to go on a really expensive trip or do something, knowing that they're going to be in bankruptcy court fairly soon. They decide to just blow everything, and some of them buy a bunch of lottery tickets, and all kinds of crazy things happen. So I remember in the middle of the U.S. crisis, there was an interesting thing that happened with people that stopped making their mortgage payments on their houses, and this happened a lot, apparently. What it was nobody bothered to foreclose on them, so they actually stopped making their mortgage payments, stopped paying the taxes, stopped paying the insurance on the house. They knew they were going to lose the house, and they didn't have any economic interest in it anymore because they're upside down on the mortgage. And so they just stopped paying, and actually the average length of time people got to live there was 24 months. So they got 2 years rent-free, which actually meant that without those expenses, they probably could probably get their credit cards and everything, their car loan back under control. So there's a lot of odd things that will be happening when people get into that state. But the main thing I learned from that little bit of research I did was that if bankruptcy is inevitable, it's better to go sooner rather than later. And the other thing that they talk about is there's a bunch of sharks sort of circling around that purport to help people with getting out of, avoiding bankruptcy, and they charge very high fees. But the true bankruptcy trustees who, it's a very long and onerous, it's about a 7-year approval process to become a bankruptcy trustee. They don't do all that. So they would prefer, I think, that you go directly to those people right away, a licensed bankruptcy trustee, rather than dealing with the people who advertise, who are probably just getting some fees from people before they go bankrupt. So it's a very unfortunate, sad part of life. But going back to where we started, with the debt levels as high as they are, it's inevitable for some people, both in the corporate sector and in the household sector.
Hilliard, thank you so much for chatting with us.
Nice talking to you.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Ted Dixon, and Hilliard MacBeth. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.